Ladies and gentlemen, it is my belief that the data I am about to present to you will shock the vast majority of the market. And the reason being is because most people actually think that this price range is incredibly bearish on Bitcoin. Well, as of the last 24 hours, we have seen recent developments that are suggesting now that this price action, this short-term consolidation region, could actually be decent for Bitcoin and even potentially bullish. I'm going to be backing up this video in 3 parts. Part 1, I'm going to be looking at the short-term analysis. I'm going to be looking at the ascending triangle formation. Not many people know about this ascending triangle formation on Bitcoin that I think could actually be forming. I'm then going to be moving over to part 2. I'm going to be looking at the bearish divergence on the weekly chart. Now, that's a bearish thing, obviously. A lot of people are bearish on the weekly chart right now. A lot of people are saying that the weekly chart is seeing exhaustion, but I'm actually going to be showing you why I don't think that bearish divergence is necessarily as bad as people think. I'm going to be backing it up with 3 main points. Point 1, bearish divergences on the weekly chart are historically inaccurate. Point 2, Gaussian channel trend on the weekly chart is historically very accurate, and I think we can overweigh the bearish divergence using that. And point 3, even if we were to admit the bearish divergence is there and is, a bearish thing, we could actually back it up and make a counter argument that the bullish divergence that is on the weekly chart as well, that not many people are seeing, kind of at least balances it out. Point 3, part 3 of the video is going to be this. There's an important range on Bitcoin, okay? The range between 24.5k and 32k, and that range is being copied to a range we saw in 2019. I think we could be seeing a very similar kind of move. That is the brief outline of what this video will entail. Guys, without further ado, let's get into it. So, ladies and gentlemen, I want to ease you into these topics today because they're actually quite complex, and they're not necessarily complex in the traditional mechanical sense, but they're complex because it's not what you'd be expecting. I'm making, not necessarily claims, I'm making bold observations in this video. A lot of people have been saying, as I mentioned in the introduction, that this is a pattern of exhaustion. This price region has been an exhausted price region. We're destined to go down from here. We're destined to drop down from here. And I'm not even talking about to new lows. I'm talking about to even a drop down to the low 20k region. I don't necessarily think that's as confirmed as people believe it to be. So let's look into that. Well, what are the patterns? Let's zoom into the hourly chart first and foremost. What are the patterns people have been dissecting from this price region? People have been saying things like, oh, this could be a horizontal channel formation. They even originally said it could have been a rising channel formation. You might be thinking, where's that rising channel? They said that this line over here could have cut through. It could have been something like this, a rising channel formation that we broke to the downside, and we would have continued down from there. I've been skeptical throughout this entire charting formation. I've been saying there is no clear pattern here. There's no clearly identifiable pattern. We can't be certain about what's going on with Bitcoin right now. But now I actually believe that for the first time in this entire price range, and guys, this range has been going on since the 22nd of June, I believe that we've found the first valid charting pattern we've seen here. What is that charting pattern? Believe it or not, guys, it's actually something that's almost resembling, not quite, but almost resembling an ascending triangle formation. If we draw the line there, we have 3 clean retests, as you can see from this week over here. We have 3 clean retests of an uptrending support line, right? One over here on the 22nd of June, one over here on the 1st of July, and one over here on the 7th of July. That forms an uptrending line. We then have the top line of the ascending triangle formation, or speculative ascending triangle formation. That is stemming back here from the 24th of June, going through to the wick on the 6th of July. Now, there is unfortunately a complicating factor. The complicating factor is that this top line, as you can see, is very, very slightly uptrending. Now, that is threatening. Okay, that is threatening because if it does turn out to be an ascending wedge formation, which is what it would be if that line was uptrending, what we would actually see, right, is an ascending wedge. An ascending wedge is a pattern of exhaustion. An ascending wedge is what you see at the top of a rally like this. An ascending wedge is a reversal pattern that you see that drops downwards. But I'm actually not willing to accept the fact that this is an ascending wedge formation at this point in time with this minimal amount of evidence, because I actually believe that this wick, although it is slightly higher, it's still rejected from the same vague resistance box, and it only went, right, less than like 2 dozen USD higher. I'm not willing to accept, based on one wick going just a tiny bit higher, that this is an ascending wedge formation. I would be more likely to accept at this point in time that this is an ascending triangle formation, but fundamentally, I'm not actually likely to accept anything. What I will accept is that this uptrending support line is more than valid, and the fact that we have an uptrending support line, okay, pushing against a large horizontal resistance zone, I think it is more likely than not this is an ascending triangle formation, in which case what we have been seeing on the daily chart, bear with me here guys, what we have been seeing on the daily chart, okay, actually makes a lot of sense. And you might be thinking, what have we been seeing on the daily chart, Wolf? I'll tell you what we've been seeing on the daily chart. We've seen a downtrending line on the RSI on the daily chart, okay? Now, what this RSI line it represents is resistance. This yellow line represents resistance. We broke it to the upside. We saw a rally because of the break to the upside. We rallied up, as you can see on the chart just above, we rallied up from 27K all the way up to 32K almost, at the doorstep of 32K. We saw a big rally. We then rejected sharply from the RSI line at around 72.5, the rejection line at 72.5. What does this tell us? It tells us that the breakout from the RSI line led to a pump. The rejection from the RSI line led to a drop. This shows us the RSI line on a daily, especially in the last month or so, has been critical. Again, the breakout of the yellow RSI line led to a pump in the price. The red RSI line led to a rejection in the price. It tells us the RSI line is very, very important. What do we have based on that? What do we have on the RSI now? We see a resistance support flip on the resistance line. We've flipped it for support. That is bullish, guys. So the RSI, we've proven just by the last 30 seconds of speaking that a breakout of the yellow line is bullish. A breakout of the rejection, a bearish rejection from the red line is bearish. Therefore, the RSI on the daily chart has led to continuations or rejections in price action. Therefore, the RSI on the daily chart is very important. And the fact that we've seen a bullish flip on the RSI gives the daily chart a lot of strength. We've also seen stochastic RSI, which is also quite important on the daily chart. Now, it's not entirely accurate, but it does generally predict moves, okay? If you're looking at major tops, major bottoms, the daily chart RSI isn't particularly bad at predicting tops and bottoms. It does miss a fair bit. It's a pretty inaccurate indicator, but we can't ignore the fact that the stochastic RSI on the daily chart did have a down-sloping support line that we've actually just bounced off. And not only have we bounced off it, we've seen a bullish cross, and we've managed to negate the bearish cross in stochastic RSI here. So I think that stochastic RSI and RSI on the daily chart are actually indicating the fact that this could be a bullish structure. This could in fact be a bullish triangle formation, a bullish ascending triangle formation, even though the hourly chart shows a slightly uptrending line, which could be indicative of a bearish wedge formation. So I actually don't think, right, that this is terrible. I don't think this is a terrible circumstance to be in. I think if you looked at my videos from yesterday or the days before, when we have no structures like this that are identifiable, or at least not any that I identified personally, I think that I would have been a lot more bearish than I am now. I'm actually, slightly optimistic about the Bitcoin price action now. And I think, we're going to look at part 3 of this video in a second to do with this macro chart, which is going to show you quite a lot more of why I'm optimistic. But I think part 2 of this video is going to show you why I think a lot of the bearish arguments aren't particularly bad. So that was part 1 of the video, short-term analysis. Now we're heading into part 2. So why am I sectioning this video off like this? I'll explain that all in a second. But what is part 2 of this video? This part 2 of this video is basically debunking a pretty bearish argument that I've been seeing around. Now, a lot of people have been saying, as I said at the start of this video, a lot of people have been saying, they've been indicating to me that Bitcoin is exhausted here, Bitcoin is going to go down. They've been pointing to a bearish divergence on the weekly chart as one of the reasons for that. We have slightly uptrending highs on the weekly chart, and in the RSI, we have downtrending highs. Therefore, we have bearish divergence. Now, there's a couple of reasons why I don't think the bearish divergence on the weekly chart is particularly important. One of the reasons is that historically, bearish divergences on the weekly chart haven't been particularly important, okay? And you might think, what are you talking about, Wolf? That doesn't make any sense. Well, I'll show you. Scroll back to 2017, okay? You might think, why are you going so far back? Why don't you look at something more recent? Well, we do have some data over here, but realistically, there's only been 1 or 2 bearish divergences since then. The fact of the matter is 2017 is a prime example. What happened in 2017? What happened in 2016? We saw multiple bearish divergences, okay? We saw bearish divergence here. We saw bearish divergence here. We saw bearish divergence as well. Actually, hidden bearish divergence between these 2 points. So 3 consecutive bearish divergences. We also saw bearish divergence over here, hidden bearish divergence. Now, I'm not zooming in because it's a waste of time, but you can go cross-check the charts if you want. 4 consecutive bearish divergences. Since that point, we've only seen a couple. We saw one at the bull market peak in 2021, and we saw one very clear bearish divergence over here, which led to a drop. In fact, it wasn't even that clear. It was a horizontal line, so I don't think it was particularly clear. But look, the point is, bearish divergences on the weekly chart aren't actually particularly common, but what I can say is the 4 consecutive bearish divergences we saw throughout 2016 and 2017, okay, all of which were invalidated, all of which didn't work. The fact of the matter is the price kept going up. Why did the price keep going up? The price kept going up because regardless of what the TA suggested, the cyclical theory was more important, okay? The cyclical theory at that point in the cycle, regardless of what the bearish divergences on the weekly chart suggested, was that Bitcoin was going to go upwards, and therefore Bitcoin went upwards. The fact of the matter is, cyclical theory is more important than divergences. If you do want to make the case, okay, if you do want to make the case that Bitcoin is seeing a bearish divergence and hence should go down, you also need to consider under that same logic, because what is the logic? The logic is divergences are very important in the weekly chart, okay? Under that same logic, why aren't you considering and why aren't you mentioning the fact that Bitcoin is also seeing a hidden bullish divergence in which we're seeing, okay, let's look here. This is basically a downtrending line here, downtrending line with support. We're seeing an uptrending line with support here, right? Higher lows, and we're seeing lower lows in the RSI. If you're considering the bearish divergences with 2 retests, the bearish divergence with 2 retests, why aren't you considering the bullish divergence with 3 retests? Okay? They're both there. They're both equally as valid as per your own reasoning of analysis. So wouldn't you say that we need to look for a stronger argument? I don't think the argument is particularly strong. I'd say they both cancel each other out. What I would propose to you is this. I would propose to you that on the weekly chart, the thing we actually should be looking at, the thing we actually should be holding weight to, is something like the Gaussian channel trend. If we're looking at the Gaussian channel is something that's very clear and very simplistic. There is a trend on the Gaussian channel, okay, on the weekly chart. Every time we move through the center line of the Gaussian channel, we see a significant move to the direction we came in. If we move through to the downside, okay, so we move through the center line to the downside, we generally move through further to the downside. If we move into it from the upside, we move through further to the upside. We see dramatic moves. We've kind of moved through this thing fluidly, right? Up, right? Down, down, up. We move through it fluidly. Now, what have we seen? We've moved from a downside through the center line, and we've broken above the Gaussian channel. Therefore, as per the historical trend, with 100% accuracy, unlike the RSI, we should be moving through to the upside and seeing a significant gain on Bitcoin on a longer term scale. That is what should be happening. If we want to look at something else that I think is more accurate on the weekly chart, we can look at the stochastic RSI. What is the stochastic RSI showing us? The stochastic RSI is showing us there is a very clear uptrending support line that we have recently retested after seeing a bullish cross, and therefore we should be bouncing further. We're also seeing on stochastic RSI a recent bullish cross. We're also seeing on stochastic RSI a bearish cross incoming. Now, generally speaking, if you're about to avoid bearish crosses, it happens just before they occur, and that would make sense after the consolidation we're seeing. If we're looking at the peaks and lows of this, we're seeing that we've recently seen a low, we've recently seen a period of oversold price action, we've bounced, and generally speaking, after bouncing, we will go all the way upwards into oversold territory. Guys, if we're looking at peaks and drops from the stochastic RSI perspective, we can see quite clearly they're very accurate, right? We had a oversold territory over here, we bounced upwards. Overbought territory, we corrected downwards. Overbought territory, we corrected downwards, right? Overbought territory, we corrected downwards massively. Oversold, we bounced upwards slightly. Oversold, we bounced upwards slightly. The fact of the matter is, guys, the stochastic RSI is extremely accurate. When you're in oversold territory in stochastic RSI in the weekly chart, it means you bounce. We've already seen that bounce, and generally speaking, when we bounce, we move all the way up into oversold territory. In fact, the only time we have not done that in any recent price history is 2019. So for the last 4 years, every time we've bounced on the stochastic RSI on the weekly chart, we bounce up significantly into oversold territory. We're only halfway there. We've got more gas in the tank, guys. We've got more fuel in the chamber for this move. I genuinely believe that. Now, I'm not saying that Bitcoin cannot go down. And the reason I'm not saying it can't go down is because of my third part of this video. It can go down. Okay, it's a matter of how far it can go down. I strongly reject the idea that Bitcoin will move downwards below 25k. Okay, and why do I reject that idea? Okay, let me break it down for you. This is part 3 of the video. I reject the idea that Bitcoin could go downwards below 25k. I think that if we did go downwards, actually to be precise, 24.5k, but I'm just going to say 25k for simplicity. If we did go downwards below 25k, I believe we would do significant damage to the Bitcoin structure. Why do I believe that? Because, very simply, okay, 24.5k and 25k was the top of this range we saw throughout the entirety of the bear market, right? We actually, if we zoomed in on the short-term charts, we tested this for resistance over here, we tested for support over here, resistance, right? 9 months of resistance there. We've actually flipped it again, tested for support and bounced upwards strongly. Now we're testing the upper part of the range. The upper part of the range, we've tested for resistance here, tested for resistance over here, support over here, support over here. Okay, so we have 2 clearly identifiable lines as per retest. We have the line at 32k, we have the line at 25k. The 25k line is the separation zone. Down here, below 25k, we have the bearish range, okay? That is where we saw the vast majority of bear market price action. If we drop below 25k, significant damage will be done to the Bitcoin structure because we will have seen a double top from resistance back into a prior range and therefore would be likely to drop down below 15k. If we are to break above 32k, which is our only other alternative, we would be breaking back into the bullish playground, the price region in which we saw the vast majority of the bullish gains in 2021. So what we have right now is a zone between 25k and 32k. This zone is basically the consolidation zone, basically the no man's land. That's where we're at right now. So Bitcoin can bounce in no man's land for as long as it bloody wants. The fact of the matter is, until we make a move above 32k or a move below 25k, nothing has changed. Now, what can we do here? How can we analyze this? Well, we can analyze short term, okay, like we've done. We can analyze weekly chart, like we've done. We can also look into previous structures because Bitcoin moves cyclically. It's a cyclical market, and so cyclical patterns form. We've seen this pattern before. In fact, we saw it in 2018. What did we see in 2018, guys? We saw in 2018, much like in this cycle we just saw, a support line formed during the bull market, the red line, okay? Both these red lines are the same historically speaking. We saw a support line during the bull market in 2018. We tested it multiple times, we held it. Just like over here in 2021, tested it multiple times, we held it. Once we finally lost that line, we moved very quickly downwards into a new range, okay? That was the bear market range. We did it in 2019 as well. We moved very quickly downwards into the bear market range in which we found the bottom, and we didn't find the bottom randomly. We found the bottom in the same way. We found a rounding bottom, okay? A rounding bottom here. From the rounding bottom, we moved swiftly upwards and we broke back in to no man's land, okay? The price region between the red and green lines. That's where we were right now in 2019. We didn't see much price action there in 2019, but we did see consolidation there in a similar fashion to how we're seeing consolidation now. Consolidation in which we retest the top, okay, and retest the bottom and finally break through. Now, we are seeing a similar structure here. And it's not identical, okay, because this one's been drawn out a lot longer. As you can see, we only spent a few weeks in no man's land in 2019. We're spending months in there now. But the fact of the matter is we did actually break to the upside in 2019. And because Bitcoin moves cyclically, we can expect it to break to the upside again, back into the bullish playground, just like we did in 2019 before, okay, and this is what I'm going to say to you now. If we do follow this pattern, it would be likely Bitcoin breaks upwards, moves upwards further, and then, like 2019, sees a long period of consolidation before the next bull market. That is what we'd be looking at. Now, I'm not saying that's locked in. I'm not saying that's certain. I'm saying if we were to make the observation that these two strike cycles look similar, which I think they do, I think especially the two ranges we're seeing here look similar, then that would be what would happen. So I think right now, let me just summarize what I've said in this video first and foremost, okay? First thing I said, part one, I said that for the first time ever, okay, within this price region since the 22nd of June, Bitcoin's actually formed a valid structure. We hadn't had one before, we have one now. I think that although technically speaking, okay, it is actually an ascending wedge formation, I would say that it is more likely to be an ascending triangle based on a daily chart and based on the fact that you can just move this line downwards to touch this retest over here as opposed to this one over here, which was a wick, a very short-lived wick, and it would make an ascending triangle anyway. So I think that we have an ascending triangle in the short-term charts. I think that the daily chart looks actually quite bullish. All right, I think stochastic RSI and RSI prove that. Yes, we're seeing low volume, but low volume is typical of consolidation. So I don't think that the short-term charts look as bearish as people think. I'm not entirely convinced for them, by them with that said, but I don't think they're as bearish as people think. I think that the weekly chart, which is what a lot of the bearish argument is based off at this point in time for a rejection, does have a bearish divergence, that is true, but there are more important things that we could look at from the weekly chart, including other RSI divergences that would either cancel out the bearish divergence or overweigh the bearish divergence in the bullish territory. I think that the third point I made was quite compelling as well. And that is that we're seeing, particularly, if we're disregarding the similarities to 2019, even if you disrespect that, even if you don't agree with that idea, I think you can agree with the idea that we do have two very clear lines here on Bitcoin. 25k and 32k. To be precise, 24.5k and around 31.7k. These are the two lines we're seeing. And I think you can agree as well that from a macro perspective, unless we drop below 24.5k, right, that green line there, no cyclical damage, no macro damage will be done to Bitcoin because we'd be in the same range. Therefore, I would encourage people to consider, okay, that Bitcoin is not only looking optimistic from a short-term perspective, but even if it isn't, and even if we do break down and go down and retest support, we have a lot of room to the downside to move to, and all of that room would be healthy. So I don't think that Bitcoin is in a particularly bad position right now. Now, what I want to point out to you is this as well. In basically today, right? Today, so very shortly coming up, we have CPI. CPI causes volatility not only for traditional markets, but also for Bitcoin, okay? The CPI reading, the consensus is 3.1. The previous reading was 4. So what this means is there's going to be a speculated 0.9% decrease, right, from the previous CPI reading to the one coming out today. That's a big decrease. And those decreases, as they increase in expectation in size, they can increase in room for error. That could be wrong, and that could lead to extra volatility. So I think that Bitcoin is actually relatively likely, and it's hard to have any degree of certainty on this, but I think that if the move is going to occur, it could be very likely to happen today. So watch out for it, right? Watch out for the break below this support line here, or watch out for the break above this resistance here. This could be happening quite shortly. So I think the data I presented in this video was quite interesting because I don't think many people actually understand what's happening in the short term. And I don't necessarily sit here and claim, apologies if I gave you this impression, I don't think it's like particularly bullish. I just think I'm more optimistic than I was the other day. And that's a revelation, right? Because I couldn't identify any structures here the other day. I can now. And for me, that's quite important because I think if you have a structure, you can trade. If you have a structure, you can make money. If you have a structure, you can identify a trading plan. You can see if we break down here, we short. If we break up here, we long. That's what structures give us. We didn't have that the other day. We have it now. And I think with this structure, we're actually looking more optimistic than we did yesterday as well. How would I predict the next Bitcoin price action? I think that there are two scenarios. I think that scenario one, okay, is we break upwards. Okay, and we break upwards probably into that, deeper into that 30k region, mid to high 30k region on the next impulse. I think that scenario two is that we reject downwards, we go down to something like 28k, 27.2k, something like that. Then we bounce around, come back up and break up later. And I think scenario three is incredibly unlikely. I think scenario three is we come all the way down and we break this support here. I don't see a retest and bounce of this support zone as likely either. I think going down that far is unnecessary. We have major support in between these levels here. So I think if we do go downwards and retest 25k, that would be kind of odd. But even then, even with that said, I don't think Bitcoin is long-term bearish until we actually break 25k, 24.5k. We need to break it down. And I say 24.5k because that's where these two weekly candles close. So 24.5k is the actual level. I've been saying 25k all video just for simplicity, but it's 24.5k. So guys, we've got a lot of room for error on Bitcoin. Even if we do go downwards, it doesn't look particularly bad immediately. And I think I'm slightly optimistic about short term as well. We'll have to wait and see what happens. Ultimately, it's hard to be too confident about short term because it is, at the end of the day, it is a grey area price region, and we are at strong resistance, so there's only so optimistic you can be. But I hope this video has kind of given you an insight of what's actually happening with Bitcoin. I aim to give you the most non-biased analysis I can give, and it's hard to be overly bearish when you have a bullish structure forming. I think that's something to be quite clear about as well. But guys, I don't encourage people to react before the market has moved. I'm a breakout trader. I encourage you to wait for breakouts. Ultimately, it doesn't matter what my opinion is. It matters what the market does, and that's why I'm a breakout trader. So, without further ado, guys, check out the Bitget exchange, check out the Crypto Academy, let's take a look. Crypto Academy exchange, Bitget exchange, not the Crypto Academy, Bitget exchange. 5 times lower fees than Binance, non-KYC or optional KYC from the USA especially. You can sign up using a VPN and clicking other as country of origin. Guys, 5 times lower fees than Binance, lowest fees in the game. Get onto an exchange that isn't facing all this SEC investigation, all these trials. Get onto an exchange that's free from all that, that's released its reserves information, that's safe from that perspective. It's got a protection fund in case you get hacked on the exchange. It's got everything you need in an exchange. Sign up using my referral link, get a 15% trading fee discount and access to an exclusive reward center for life, guys. Check that all out. Referral links in the description below. We've then got the Crypto Academy. Let me refresh the page so you can read up about this. This is the website. You'll see it in just a second here. As you can see, the name of the course is Become a Trader. It's a 10-unit course, and as per the title, if you do this course, you will have the skills available to become a trader. Those skills including chart analysis, identifying patterns, candlestick market, market patterns, indicators, all that kind of stuff, market psychology, how to find the trades, how to actually trade them once you find them, strategies, etc. Everything you need to know about trading, or the vast majority of things you need to know about trading, are in this course, and you can check that out on the website in the description below. Also, throw us an email. The email address is on the website. And finally, guys, the VIP group is where I give you altcoin trades on Telegram. If you want a more direct thing, if you want me to give you the entries, give you the take profits, give you the targets, whatever they may be, stop losses, I give that to you on Telegram. You can find the pricing, you can find the details of the group in the information Telegram group below. That's free to join. Check it all out. Guys, thank you so much for watching the video. I hope you enjoyed. Please leave a like, comment, subscribe, but most importantly, comment and give me suggestions for next videos. Give me your opinion on the video. Give me everything you want there in the comment section. Thank you guys so much for watching. Hope you enjoyed. Catch you.